Hello my dear friends, this is the third and the final part for chapter 1 Introduction to Accounting class 11th accounts. So if you have not seen the first two parts, please go and watch them first. So your basic concepts will get cleared. And in this video, I'll be covering the remaining topics for the chapter. So let's start. Have you heard about these two terms, accounting and accountancy? Are these the same? No. So do you know the difference between them? If you don't know, don't worry, I'm here to explain. Accountancy, it's a subject, or we can say it's a knowledge of accounting. Means it tells us, it teaches us, or it educates us how to maintain systematic records, how to summarize, how to analyze the results, right? Whereas accounting is an action, or it's a process of doing these things. Means it's a process of identifying, it's a process of classifying or recording, classifying, it's a process of summarizing and analyzing, it's a process of communicating the results. So this is the difference between accounting and accountancy. You must have also heard about the term bookkeeping. So is it the same as accounting? There is again some difference. So accounting, it's a wider concept. It includes bookkeeping, or we can say bookkeeping is a part of accounting. As bookkeeping involves the first three steps of accounting process. Means it includes the identification of financial transactions, measuring them in terms of money, recording into the books of accounts, and classifying them into the ledger accounts. Whereas accounting, it includes the further steps as well, where including these steps, then analyzing and summarizing the accounting information, then interpreting the results, communicating it to the required users, right? So accounting is a wider and bigger concept which includes bookkeeping. Next topic is users of accounting information. So who all are the people who require the accounting information? So we can classify them as internal users and external users. So internal users are those people who are within the organization and require the accounting data. And external users are those people who are not working in the organization but somehow related to the business, and they need the accounting information too. Firstly, we'll discuss about the internal users, then we'll go to the external users. So, internal users, as I mentioned, they are the people who are working within the organization, or we can say they are the part of the organization, right? So first who comes under the internal user is the owner, businessman, or the person who has started the business, would definitely be interested in knowing the accounting information, because he would definitely want to know how much profits he has earned, or in case of any losses he has incurred, and he'll get to know through financial statements only. Second is management. So the management team are those people who are working at the top level of the organization, right? So why they would be interested in knowing the financial statement? Because they have to make the informed decisions out of them. So what type of decisions they would make? They would want to know that how much should be the selling price of their goods, or how to control or reduce the cost of their goods, or what type of, or how to make the investments in different projects, right? The third is employees or the workers. So they are the people who are working at the lower or middle level of the organization. They would also be interested in knowing the accounting information, because they would want to know that how much profit the business is earning, because they would also be entitled for the bonuses at the end of the year, right? Now we'll talk about the external users. So the first one which comes under this category is banks and financial institutions. So they are those institutions who provide loans to the organization, right? So they would be interested in knowing the financial position of business, because so that they will get to know that the organization would be able to recover their loan payment or not, right? The second is investors and potential investors. Investors are those people who have invested some of the amount in the organization, and potential investors are those who are willing to invest in the business, right? So they would also be interested in knowing the accounting information, because so that they would get to know that how safe would their investment would be. Third is creditors. Creditors are those people who supply their goods or services on credit. So before making this decision that to which company they should give their goods on credit, so they check the credit worthiness of the company, so that they get to know that the company would be able to repay their amount timely or not. Fourth, government authorities. Why government would be interested in financial statement? To compile the national income account and consequently framing the national policies. Next is researchers. Researchers use the accounting information for their research work. The next one is consumers. Who are the consumers? They are the end users of the products which are manufactured or sold by the companies, right? So based on the accounting information, the companies reduce or control the cost of the products, and subsequently if the costs are reduced, subsequently the prices of the goods will also be reduced, which will be beneficial for the end users and consumers, you can say. Next and the last one is public. So general public will also be interested in knowing how the business is running and how much it will contribute to the economy. Now we will discuss the last topic of the chapter, which is systems of accounting. So there are two systems of recording transactions. One is double entry system, another one is single entry system. So as per double entry system, according to this system, every transaction has two aspects. Means every business transaction will affect at least two accounts, and that is in opposite direction. One will be debited, another one will be credited. So what does it mean? Let's take an example. If the company is selling goods, so the two accounts which will be affected, one is the sales account, right? Another one is cash account if the goods were sold on cash, or if the goods were sold on credited, so the person to whom goods were sold, his account will be affected, right? So let's take another example. If the company is buying any furniture, so two accounts will be affected, the furniture account and the cash account, or any other personal account if it's on credit, right? So as per the system, the two accounts will be affected. If we talk about single entry system, so that is an incomplete record of transactions. So in this system, all transactions are not recorded on double entry basis, right? So in some of the transactions, either one aspect is recorded or not recorded at all. So that is an incomplete record of transaction that is not used in accounting. We use the double entry system only. And with this, I end my video here. I have completed the full chapter in 3 parts, and if you have not subscribed my channel yet, please subscribe and don't forget to press the bell icon so you get the timely update as soon as I'll upload my next video on another topic. Till the time, bye and all the best.